This cycle in crypto feels quite different to prior cycles, yet there are similarities. If we actually compare what happened in the past to what's happening today, there are some ways to figure out how much higher we could go, but also how much risk there is in the market. Have a look at this chart. It compares the different cycles of Bitcoin, and we can see that over time the relative performance tends to decline. So this is an effect called diminishing returns. When Bitcoin was rather small in its market cap, it was able to appreciate much more percentage-wise. Now, where it's in the billions of dollars, it takes much more capital to move the asset. Thus, the relative appreciation is smaller, but the effect is twofold. We also tend to see less downside momentum now. So that's what we see at the top. At the top is the maximum drawdown. We saw massive volatility to the downside in the past, and now in our current cycle, the worst we have seen was a 20 to 30% correction. The median correction is now only 9%. A few years ago, Bitcoin was an entirely different beast. It was just an asset class where people said it's okay to maybe put some pocket change in it, but not to really seriously invest in it. Because nobody knew, will Bitcoin get outlawed? Will it get hacked? Will it get replaced by something else? Now, after all of those years, all those doubts are gone. But because Bitcoin is now a safer asset, it also means that the people that now buy into it tend to do this with a longer time horizon. So whenever there's a decline in Bitcoin's price, people tend to necessarily not realize those losses that quickly anymore. Have a look at this. This is the entity adjusted realized loss. And yes, there were quite a few people that realized their losses after the Terra Luna and FTX collapse and after Three Arrows Capital went down. But now with the recent correction from above 110k to slightly above 100k, we barely saw any loss realization. So really, this was short-term fluctuations. This was not necessarily people that bought in higher that suddenly started panicking. People that now buy at those high prices, they do so for the long term. They don't do this to flip Bitcoin very quickly. That's a very different dynamic to what we saw when Bitcoin hit first the 20k or when Bitcoin ran up from 3.5k to 60k. That's when a lot of people got excited about Bitcoin, when people talked about it hitting new all-time highs, when a lot of new investors got into the space when the market was heated. That's then when we see the correction where everybody is selling. But right now, it's rather the long-term investor that's buying in. The options traders, so the people that just bet on the price via derivatives, tend to agree. The implied volatility of options on Bitcoin is extremely low. Most option traders think now, on a historical scale, that Bitcoin will not do any erratic moves to the up or to the downside. Of course, the best time to buy crypto and to buy Bitcoin is when people are realizing losses, when people are losing hope. Unfortunately, that doesn't happen too often. And the question is, will it happen that more often in the future, given that the volatility moved from very high to very low now? It was a great time to buy when FTX went belly up and when Bitcoin traded around 20k. But just because some long-term holders are now realizing profit does not mean that we can't go higher. Let's zoom out on this chart a little bit. So this is now starting in 2012. This is the long-term holder realized profit to loss ratio. And of course, it's best to buy when people realize losses, when people are giving up on crypto. But even if we are at historically high realized profits, it doesn't mean Bitcoin can't go any higher. For example, over here, Bitcoin moved from 1k all the way to 20k. Or over here, Bitcoin moved from 20k all the way to above 60k. We are not historically cheap, but the question is, will we get those cheap entry points in the near future again? The best time to sell is when the short-term holders dominate the trading. So what we see here is the long-term holders. Whenever this is very high, the short-term holders have very low activity. They don't realize profits or loss. They're doing nothing. And that tends to be the bottom of the market. So nobody is looking at Bitcoin except the long-term investors. And then as the price appreciates, all of those short-term tourists enter the space, and then the long-term holders gradually take profit. They gradually move their Bitcoin to the short-term holders until the price peaks, and then the long-term holders accumulate again. So Bitcoin is a very nice transfer mechanism from the short-term tourists that just want to make a quick buck to the long-term holders. And long-term with crypto investments doesn't even mean 20, 30 years. It only means 3 or 4 years. And so again, the best time is to sell when the short-term holders are taking over. We are not there. Currently, the long-term holders are rather accumulating again, despite the price being that high. And that's something we haven't seen in the past, right? In the past, when the price appreciated, the long-term holders tended to sell. Not this time. This time, the long-term holders sell and the short-term holders haven't even arrived yet. This market is not heated. This market is not dominated by short-term interest. This market, surprisingly enough, even though we are at an all-time high, is still led by the short-term holder, by the long-term interest. Since October of 2023, we see the stablecoin market cap going up. So people are converting their hard-earned fiat for stablecoins in order to buy crypto. We also see inflows through the ETFs. So in the past month, 2.4% of the entire Bitcoin supply annualized got absorbed. So if just the current rate of purchasing continues, we will have roughly 3 times of the supply that gets mined every year already getting bought up by the ETF. For Ethereum, the supply absorption is even faster. It's 4.2%. And of course, it's not just the ETF, it's also now the Bitcoin treasury companies headed by MicroStrategy that are buying up more and more of the supply. And again, those kind of holders are not selling, at least if they don't have to. So if we take away the ETFs and we just look at the Bitcoin treasury companies, this is just going up steadily. So as long as we don't see an implosion in the Bitcoin price, so a drop that's more than what we saw in the past, which was already a 70% decline. As long as we don't see a huge black swan, we are unlikely going to see a deleveraging event of those Bitcoin treasury companies either. And then we have also, of course, the ETF demand. So in the last year, we saw roughly 1 million of Bitcoin supply getting scooped up, or 5% of the entire supply, just by the ETFs and just by MicroStrategy and co. And so it might seem to be risky to buy Bitcoin close to its all-time high, but really the question is always about supply and demand. And if the demand is not short-term speculative demand by people that just want to make a quick buck, but the demand is actually long-term investors that just continue accumulating, then buying near the top might not be the worst thing ever, especially if your time horizon is also 3, 4, or maybe even 5 years. Again, Bitcoin is a transfer mechanism from the short-term tourist, from the trader, to the long-term investor. The short-term tourist has all of their allocation near the price tops. The long-term investor has all of the allocation near the price bottoms. So you want to be a long-term investor. You don't want to buy Bitcoin just for the short term unless you really know what you're doing. If you've got a good back-tested strategy and you've got proper risk management in place, then by all means trade short-term, but short-term trading is player versus player. You have to be better than the average short-term player. But if you're a long-term investor, your competition is the short-term trader. And again, most short-term traders, they just enter the market when they hear about Bitcoin, when it's hitting new all-time highs. They got short-term excited about Bitcoin, then the price drops, then they exit again, and then that exit liquidity is your profit. Now it's quite fascinating that most people take the hard route. Most people try to make money in crypto by finding the next asset that does a 10x return. The problem is that most assets don't do that. Most assets go down. There are a few assets that take a lot of the returns, but it's a market where the winner takes most. On top of that, we also have to be right about the macro environment, as in if Bitcoin goes up, then most altcoins go up as well. When Bitcoin dumps, most altcoins go down as well. So really, I think there are smarter ways to make money. I think it's better to try to not focus too much on the macro. I think it's better to find price discrepancies where you don't have to find the few winners. Let me show you what I mean. What do you prefer investing in? Is it the line at the top or is it the line at the bottom? Now at the bottom, we see Bitcoin's price movement. So this chart starts in February 2024. And as you know, we have seen quite a bit of a drop during that time, a 30% decline after we're now back above 100K. But the chart at the top has much less volatility. During that time, it appreciated by more than 1,000%, while Bitcoin went up by only 115%. Or have a look at this chart here. This starts in November of 2020 and it went up by 9,000%. While at the same time, here is Bitcoin, it only went up by 500%. Now what I'm showing here with those charts at the top are actually not altcoins that outperformed the rest. It's not one of those few winners. Instead, we looked at relative valuation charts. So we looked at the Bitcoin price relative to a very poorly performing altcoin. Now I'm not saying what kind of altcoins this is, but in general, this is also a Bitcoin chart here at the top. It's just not relative to the US dollar, but relative to a very bad altcoin. Let's make an example. Check out this. This is PIF. PIF had a lot of token supply growth in the last 30 days. So here are the tokenomics of PIF. Over time, there's more and more supply hitting the market. Now, if demand doesn't grow as quickly as supply, the price should be going down. And as per tendency, that is right. So this is now the PIF chart. Now, PIF is an asset on the Solana chain. So let's compare Solana with this. The price didn't always go down. And that's because sometimes Solana rallies. And so PIF comes with it. Again, the problem with correlation, the problem of the macro environment. But when we look at that PIF chart, not in US dollars, but relative to Solana, suddenly we've got a much more stable trend. Now, this is not necessarily the trend we want, right? We don't want to buy PIF, but we want to do the exact opposite, right? We might consider buying Solana and betting on falling prices of PIF at the same time to then get the delta. So in the end, we cancel out the macro because we are long one asset. We bet on rising prices of one asset, in this example Solana, and we're betting on falling prices of the other asset. So in this case, PIF. So overall, what the overall market is doing when it's going up and down, it doesn't matter to our portfolio because one thing tends to go up, one thing tends to go down. The only thing that matters is the relative performance. And then we've got very constant declines. Or if we now flip this chart, if we don't look at PIF relative to Solana, but we look at Solana relative to PIF, we get our nice growth charts. So this is now a more than 500% increase. And again, it's much less volatile compared to buying Solana directly. So this is, I believe, the easy way to make money in crypto. It is a bit more complex than just buying a random altcoin, but in the end, we have the odds in our favor because again, most altcoins tend to go down because the supply expands over time, and we are also hedged against the macro. We don't care if Bitcoin and Solana go up or down because we go both long and short at the same time. We can have a very constant growth this way. And here is what I mean with constant growth. This is my portfolio development since I started trading this long short strategy. The maximum drawdown was 5.67%. The equity is 36K and the growth over the span of roughly 2 months was 11K. Now, the most important thing here is not necessarily how much this grew. That's of course nice. But what I really like is that the drawdown was so low. We don't care about the macro. We don't care if things currently go up or down. All we care about is pricing inefficiencies. And so think about it. Do you want to buy a lot of different altcoins hoping for the one moonshot that might make up for all of the losses that in the end might never come? Or is it maybe better to just continuously grow with very little downside? I think the latter is better. If growth is predictable and if you can manage our risk properly and if you can make money independent of the market situation, we've got something that's much more valuable than just trying to find the 10x that might never come. Now again, this strategy is not as straightforward as just buying an altcoin on a centralized exchange. We do have to learn a little bit, but I actually made a video just on that topic. You don't have to watch every single video here, but the one at the top, that's the most important one. Using perpetual futures on Hyperliquid to bet on relative valuations. It's 34 minutes after you've watched this. You should understand how to do all of those setups. How to bet on charts like this or how to bet on charts like this. And how to have the odds in our favor, right? With all of those red bubbles over here. And again, be independent of the macro. It's the constant growth that's really attractive. So again, here's that tutorial video. It's part of the premium membership, thebitcoinstrader.com. And of course, I also share my own trades. For example, over here, I shorted WorldCoin recently. WorldCoin relative to Ethereum. So we're betting on Ethereum to outperform WorldCoin. So that was on the 23rd of May. I'm sharing this because this position is now closed, and I closed it on the 28th of May. And so in the end, when you've got the right risk management in place and you put on some leverage on the position, you can make really nice gains. Here was the hyper liquid chart at the time. So it already went up a little bit since then. But yeah, people are making money with this, right? This is not just me cherry picking the data. Here, have a look at this. This was one member that made some money with the WorldCoin short. Another one over here and here and here. Thanks, Gerhard. The premium membership paid itself already. And so that's in the end the fundamental idea, right? It's about making consistent gains. It's not about buying random lottery tickets, hoping for the one salvation trade. So feel free to check it out. It's currently $125 per month. It used to be 165, but currently the attention on crypto is comparatively low. Once all the tourists enter the space, I will of course raise the price again. Right now, if you sign up today, then you will lock in that price. So everybody that signs up now will not get affected by the future price increase. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. There should be a link to premium directly over here. You just click on that card and it will lead you directly to the sign up page. See you over there. Cheers.